Hello, everybody. Welcome to today's edition of the 1Mby1M podcast. I'm here today with Dennis Joyce from the Alliance of Angels. Welcome, Dennis. It's great to have you.
Thanks for inviting me. I'm happy to be here.
So tell us about your investing focus. How does the Alliance work? What is the focus? And what size investments do you like to make?
The Alliance of Angels is the largest angel investing network in the Pacific Northwest. We have a rotating membership of roughly 145 members. Probably about 10 times as many people have come in and out of the organization and are connected to the network. So it's a very, very vibrant community. We meet once a month. We typically screen roughly 35 businesses per month, some of them first and second time applicants. And then what we do is we run the top 7 through a vigorous screening process, and then we invite our top 3 or 4 companies to our monthly luncheon. And then from there, the companies present, and our investors will break out based upon interest and perform due diligence on the companies that each individual member is interested in tracking. So it's very much a member-led process, and it's kind of decentralized. So it provides each member an opportunity to get deal flow, but then to make individual decisions and write their individual checks. We are all accredited investors, and we're all adults. So we collaborate with each other, but then we think independently.
And what sized investments does the group like to make?
Well, typically, a successful round will be a company that is raising in between maybe $500,000 to $1 million. So it's sort of your first institutional investing work. It's usually a company that has a team in place that is doing it full time, that needs to raise some money to get their product out to market and get some sales, and they need some finance to really kind of fuel their next 12 to 18 months of operations. And that's a good fit for us, because we want to work with a company that is, operational and working on it, not just, theoretical. And we want to be able to provide as much help and resources as the company needs in order to get to the next level.
And what validation do you want to see in the ones that you do choose to invest in? Are you looking for customers? Are you looking for pre-customers, revenue, pre-revenue? What is the sweet spot?
For me personally, or for the Alliance?
For the Alliance?
Well, the Alliance is typically looking, as investors, we are balancing, thousands of patterns, or we're trying to match different sort of patterns. And, there are, what I think of as risk factors. When I look at a company, I'm sort of balancing all the different ways that this company is going to run into problems. And I'm looking for the founder of the company to show me that they are capable of mitigating these risk factors one by one. So it's I'm not necessarily, when I'm looking at a business plan, I'm trying to fit the idea into its marketplace, and then I'm trying to say, okay, well, here are the risk factors in that marketplace. How is this founder going to tackle that? Are they going to charge enough money to make a living at this? Is it easy for them to acquire customers? Is this a huge marketplace where they're capable of making, 10, 15, 20, $50 million in revenue per year? I'm looking at those types of opportunities and then risk factors, and trying to see if we can kind of make sense of them. And, in that place, I'm looking for companies that are going to be able to get lots of revenue. I'm looking for a team that's capable and have deep domain experience. And I'm looking for a huge revenue opportunity, because I think those three drivers are going to take a company very far.
So going back to my question, in terms of stage of validation, what is the sweet spot? Are you looking to see customers already in place? Are you looking to see revenue already in place before you are willing to write the check?
Well, yeah, definitely we're looking to see as many customers lined up. A founder has to really know their space from a sales perspective. So a lot of the best business plans are the ones where the sales and marketing team have lined up customers, have created inroads for their first set of customers, have validated the product a little bit from a sales perspective. And, we really need, it's kind of we're sort of constantly driving towards more sales. A lot of times we see companies that don't have any customers lined up, and that's a huge risk. So, you need to constantly be working towards mitigating that risk all the time. I wouldn't say that there's one moment where you're like, aha, that's my signal to invest. But we're always looking for the teams that have an understanding, a deep domain understanding of their product and their customers and what those customers are willing to pay for it. And the best ones are the ones that are constantly trying to drive sales, constantly trying to drive revenues, trying to charge a lot of money for the product. That's a big thing for me, because I think a lot of...
So you like B2B deals that are larger ticket items, if I'm hearing you right?
No, that's not necessarily the case. It doesn't, for me, it doesn't really matter what industry it is, what type of product it is, what type of marketplace. I'm kind of agnostic in terms of that. What I'm interested in is, the unit sales and the cost to acquire customers, how difficult it is, the sales cycle, how long that is, the ability for the sales team to understand their marketplace and their vertical. Those are the things that I'm looking for. I don't have a one sort of an area that I focus my investing.
But you just said that you want people to be charging a lot for what they're selling, and that typically tends to be the B2B deals, and especially B2B enterprise deals.
In some areas, but I've invested in companies that are consumer products as well. So I don't really have a necessary area. For me, I'm not your typical tech investor. I'm an angel investor. I'm an investor. So I'm really agnostic in terms of product area.
Okay. And geographically, you invest all over the Pacific Northwest, or do you also invest outside of the Pacific Northwest?
The Alliance of Angels is focused primarily on the Pacific Northwest. So we look at deals coming out of Portland, Seattle, and up north to Vancouver, British Columbia. We get inbound deals from places like Eastern Washington, so that would be Spokane or Coeur d'Alene, Idaho. But our primarily focus would be Seattle-based companies. And me personally, I focus my attention almost entirely on Seattle-based companies. I will syndicate from time to time a deal outside of Pacific Northwest, but it's very, very rare.
Okay. And what do you see? You said you see 35 deals a month. So if you look at your last 15 months of deal flow, what trends do you see? And by the way, our community is all technology and technology-enabled services. So if you could focus on the technology trends, that would be great.
Yeah, okay. Well, a lot of the trends that I'm sort of seeing, kind of disappoint me sometimes. I think that there has been, a movement, or we see a lot of products in the software as a service space, products that automate certain functions within like an enterprise, um, products that provide like a dashboard of like oversight into certain areas of an enterprise that helps them optimize, which I think are like very, very valuable and could be, helpful for an acquirer. My question usually with these companies is how much are you charging? How costly is it to acquire customers? How long does it take to drive sales? Those are some questions that I'm asking whenever when I see some of these kind of purebred SaaS plays.
Talk about your current portfolio. What have you invested in? What are some of the highlights? And how do you decide in those particular cases, what was it that caught your attention?
Well, some of my highlights, I recently had a company acquired by Nordstrom called 1Mby1M, which provided a co-shopping solution for small businesses. And now, one of their top clients was Nordstrom. I thought that in that case, the product was very, very valuable sort of tool for an enterprise such as Nordstrom. And, we really hit the nail on the head on that one. For me, the team was.
And what did it do? From a clothes shopping point of view, what did it do?
It allowed the sales representatives from a place like Nordstrom to work with their customers in a shared shopping cart capacity. So it was like it was a co-shopping platform, and it was acquired 2 weeks ago by Nordstrom. So it was
And when it came to you, what did they have? When you invested in the company, what did they have?
Well, they had a very simple software platform and a vision for co-shopping in an e-commerce world.
Did they have customers?
They had, they did have a pilot in place with a jewelry company called Zales. So I thought that was a very valuable sort of early
validation.
Early market validation of the product. They were able to nail Nordstrom and a few other sort of smaller e-commerce plays. So I thought that when they came to me, they were very, very early. They were bootstrapped, and they were just a very competent, focused team. And I thought that, with the exception of Amazon, they had a whole sort of frontier of potential customers. And so the team was able to execute. They were able to be very lean. They didn't raise a lot of money. And then when they were able to find an acquisition that, provided investors with an exit, they took it. And I think that was like a very intelligent, smart move for the leadership, because it gave us our investment back in a reasonable time frame, and we were very, very happy with the team. It was a great result all the way around. And
what was the entire life cycle of this company? When from the time it started to the acquisition, how many years was it?
I think it was about 4 years. I think it was incorporated in 2013, so 4.5 years. So for me, it was one of my first angel investments, and in this space, and for it was kind of like it was like the graduation of my
it's great. What was the total amount of capital the company raised?
I think that they raised under $5 million.
Under $5 million.
And I don't think that the terms with Nordstrom have been disclosed. So I mean, I think you'd have to sort of read about it in the publications, GeekWire, etc. Writing about it.
So this is actually an interesting segue into a trend question that I wanted to ask you. We are in 2018, and lots of stuff have already been built. nowadays there aren't so many wide open opportunities out there to build these, billion-dollar companies. There are opportunities to build billion-dollar companies, but compared to the amount of capital and the number of investors who are chasing those opportunities, I don't think we're not going to have 500, 600, 700 of those opportunities. It's going to be a limited number of those opportunities. But there are many, many niche opportunities. Some of these businesses need to be built for small amounts of capital, under $5 million worth of capital, and sold for, again, a reasonable exit. Most of the exits that happen in the industry are under $50 million exit price deals. So if you build a company for under $5 million and sell the company for under $50 million, that is still a very reasonable investment with good return on investment for the investors, good money-making opportunities, wealth creation opportunities for the entrepreneurs. So those are healthy deals. Right. It sounds like that is something that you are interested in. Is that true about you personally, or is it true about the entire alliance?
Well, it's good to get some of those results in. I think in the case of, a software platform, selling into the enterprise, if you find out that there is kind of like a long sales cycle, and if you feel like the acquirers are really trying to drive down the valuation when they want to acquire you, it's important to really just kind of like take your shots. And then if that looks like that this is like your perfect opportunity for an acquisition, I think you can take that. As an investor, I mean, I think that there are so many opportunities out there that, in certain spaces, we've seen a lot of like, we see a very, very a full marketplace in certain areas of tech. However, I do not think we are even at the earliest phases of what we need to do as a society in order to grow. Some of the companies that I'm looking at are in, robotic software technology, using robots to do very, very difficult and dangerous jobs, so that when we are, doing space exploration, or using robotics technology in areas like agriculture, or areas that are very, very labor intensive and very difficult, you want to think about like, where will we be in 40 years when we're using AI and robotics technology to do difficult and dangerous and hard to do and labor intensive jobs. So those are some areas that, like, I don't think we are way behind in development and technology. I think that in mechanization in the United States, we've sort of fallen behind because everything is now sort of built in China or in some of the frontier technologies. So I have a company right now that is building out a factory, and it's very time consuming because we've almost lost that art in America of actually schooling up a company in order to develop something in America. We have a lot of work to do. I don't think that we are filled up under any circumstances. In fact, like, I'm just sitting there sometimes going, we are late for what we need as a society to move forward. We have to keep on going and going and going and going and pushing and pushing and pushing. And then I think that there's a whole segment of society whose voice is not heard at all. And that would be, minority businesses and women's-led businesses. We haven't given a voice to these people hardly at all. There's very few female investors. There's very few founders of African-American descent and investors of African-American descent and other minority groups in America that get their money. So I'm very, very passionate about inclusion and really listening to entrepreneurs and innovators of minority groups, because we're not even close to having a balanced ecosystem in tech for these types of entrepreneurs.
So given what you just said, and if you then look back on the deal flow that you have seen, I have no doubt that you're seeing, especially given your geography is the Pacific Northwest, I'm sure there is a lot of robotics and AI stuff going on. I know that for a fact from our work. But I have a different question, which is slightly off center, actually. We are at a time in history where there is a huge number of people who are unhappy and struggling and, under tremendous stress. Their livelihoods are going away because of a lot of the things that we are doing with technology and so forth. Are you seeing deal flow that have interesting concepts in addressing some of their pain?
So could you maybe give me an example?
I don't know. I'm asking you to give me an example.
We see interesting like products all the time that are addressing kind of like social issues. One of the ones we've had at the Alliance of Angels is like an app that helps with like drug addiction and smoking cessation. That's kind of an interesting concept, using software to help with those types of issues, if that's what I'm sort of hearing. The other thing is like with mechanization or with robotics technology, we do have I have a company right now that's using real estate technology to help with the issue of affordable housing in some of our cities in America. And, that's kind of one of those things where, it's a big problem. It requires a lot of thinking, and, we see other technologies that are, or companies that are.
What technology addresses affordable housing? Is it building technology? Are we talking about building technology or finding affordable housing technology?
Building technology. So I have
building technology.
One is a software company that helps with helps real estate developers find great plots of land to develop products using AI. I have another company that's in my portfolio that provides temporary housing solutions or factory-built housing solutions, which is geared towards tackling some of the affordable housing issues. Now, we're not solving this problem, overnight. This is a long-term problem. This is a long-term issue. But I think that as an investor, these are things that are very, very important to me. I'm always looking at like not where do we need to be now. I'm thinking where will we be or where should we be in 40 years? Because that's sort of the time frame I think about when I'm looking at an investment.
Well, and in that time frame, my read is that we're going to have a gigantic, sustainability problem when it comes to jobs and livelihood, and what happens to this huge population of people who, don't really have a sustainable livelihood in this wake of tremendous automation. What happens to these people? And I'm very curious about ideas that people, entrepreneurs are thinking about to address and mitigate that enormous suffering that is coming. And it's already here, which is why we have phenomenon like the kinds of elections we're having.
Yeah, it's something we're, I'm thinking about and we're working towards. For me, automation is, you still need humans to sort of control the automation, if you will. In the companies that I'm working with, the ones that are really thinking about automation, they have to hire a lot of people to work at that company that is actually automating. So
maybe now, but not in the horizon that you're talking about in 40 years. That's not going to be the case. There will be some, but not like, if you look at Foxconn, for instance, they had 150,000 people and they got rid of 60,000 people and replaced them with robots. That's an enormous displacement, right?
Definitely. And, I need to think about that a little bit more.
If it's a topic that interests you, look at my Man and Superman series on the 1Mby1M blog, and you will find lots of food for thought, and feel free to engage, and I'll be happy to dialogue with you on the blog. And if you feel like writing, op-eds on the topic, we'll be happy to publish.
Yeah, I'd love to. That sounds awesome.
All right. Well, that's great. I think we've got a sense of what you're looking to do, what you are interested in doing, and what you are doing. Do you want to add anything as parting comments to the entrepreneur community that is listening to you?
Well, I would. I think that, you know, as investors, you know, I'm a person. I'm an optimist. Investors, or great investors, and I believe I'm a great investor, are optimists almost to a fault. So, you know, when I see problems in society, I look to try to see how we can fix those, because I'm a very optimistic person. And, you know, the advice I would say to entrepreneurs and people that are interested in innovation and tech is like, when you see problems, when you see things that occur to you as important, things that you want to see in life, you know, try to see if you can solve those problems, because I think the greatest ideas that we have are the ones that occur to an individual as important, and then they go after it and they try to solve that problem, and they try to build a team to tackle those types of issues. So, you know, I think that that's why I'm a big believer in this space, and I'm a big believer in providing opportunities for entrepreneurs that are looking to, you know, really make a difference in the world.
All right. On that note, thank you for joining the show today. And listeners, thank you for listening. Please be sure to stop by at one of our weekly mentoring roundtables. They are available pretty much usually on Thursday mornings, sometimes on other days, but look on the website 1Mby1M.com under free public roundtables, and we'll be happy to work with your venture and your strategic issues. And keep looking at the podcast list and tuning in for more perspectives from investors, entrepreneurs, and the entrepreneurship ecosystem in general. Thank you for coming today.